Hello traders, Gary Wagner here. It is 12:10 in Honolulu and 6:10 in New York on Wednesday, 13th day of July, 2022, and this is the Daily Report for gold and silver. Traders witnessed extreme volatility in the dollar and gold as today's CPI report was released when gold opened for trading in New York. Gold opened at $1,723.60 and within the first 15 minutes of trading hit the low today of $1,704.50 and subsequently over the next couple of hours rose to today's high, coming in at $1,744.30. Currently, we have August futures at $1,733.80, which is an increase of $9 on the day. We saw the same volatility in the dollar with a trading range of over 1%. The dollar traded to a low of 107.27, a high of 108.415, and is currently fixed fractionally lower at 107.845. This first chart is a 15-minute candlestick chart of gold futures. Gold trading opens in New York at 8:30, the same time the CPI report is released. We can see that gold opened at $1,723 per ounce and traded to its intraday low within the first 15 minutes of trading of $1,704, and then took about 2.5 hours before it would hit the high of the day, which came in at $1,744.30. For the remainder of the trading day, after hitting its high of $1,744, it would spend the next 3 hours trading modestly lower and is currently fixed at $1,733.70. We can see the same volatility or knee-jerk reaction to today's CPI report in the dollar index. We're looking at a 15-minute candlestick chart of the dollar. The difference, obviously, is that the knee-jerk reaction sparked the dollar significantly higher to its high of the day, and then over the next couple of hours hit the low and had modest increases to settle at its current fixed price of 107.845. Looking at this daily chart, one thing is clear, and that is that we have technical support at approximately $1,720. On this daily candle, we can clearly see that traders took gold significantly below that price point, the low coming in just above $1,700 per ounce. However, when we look at the real body of this candlestick, it opened and closed above $1,720. The fact that gold moved higher and the dollar had fractional declines following the CPI report, which indicated the highest level of inflation since inflation began to rise at the conclusion of the pandemic, might be indicating two things. First, that market participants and traders, for the most part, had factored in higher inflation into gold as well as the dollar preceding the release of the report. However, there is another explanation, and it has a much more profound implication, and that is the realization by traders that even though the Federal Reserve can affect core inflation levels, they can have absolutely no effect on headline inflation, so that this increase to 9.1% does not reflect the fact that core inflation ticked down from 6% to 5.9%. In other words, the Federal Reserve can raise rates more aggressively and at the same time not really have a dramatic impact on inflation. When that realization sinks in, I believe we will see market participants shift their focus from higher interest rates to higher inflation, and once that pivot in the mind of traders changes, we will see the perception of gold change and a key pivot point from a bearish market sentiment to a bullish market sentiment, and that will take gold markedly higher. The question then becomes, at what point Will that primary shift from bearish market sentiment to bullish market sentiment actually happen? We also need to be acutely aware that there's been a dramatic shift in the perception of how the Federal Reserve will work with interest rates over the next two FOMC meetings, because the probability of a 1% rate hike this month, followed by a 0.75% rate hike in September, has grown significantly from yesterday to today, and how that will affect market sentiment in gold. It could certainly pressure it lower, but as I said, if market participants begin to focus upon inflation rather than rising rates, we will see a significant pivot. More to follow through the remainder of this week. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.